A new technical indicator in which we are going to discuss here in this video suggests that AMC stock could hit $10 per share very, very soon. And that is the fact that we have the double bottom and the historical range of performance after you get a double bottom in AMC stock is going to put us close to $10 per share. And lo and behold, the option activity that we are seeing here today again is suggesting that we could continue to see a further squeeze to the upside when the market conditions are ripe for this. And it could be tomorrow, it could be Thursday, it could be Friday, but it's looking like $10 per share is kind of a given by the end of the week, in my personal opinion. So we have a lot to discuss in a very short amount of time. You guys know the deal. Hit that like button and subscribe to the channel if you guys have not already. And let's get straight into it. By the way, if you guys want to come trade with me live in real time as well, link down below in the description of this video. Nonetheless, we will save the technical analysis and this key indicator that I am talking about for kind of the mid to end point of this video, because I think there is some context that you must know before we talk about that. And really, let's start with what is happening today. And what is really happening today is essentially bond yields. If we go ahead and click over to the bonds, bond yields are dropping here today. That should be a bullish thing for the markets, but what it's highlighting is there's actually fear in the markets, and I think a lot of this fear, if not all of this fear, is due to, one, the crypto markets, and two, essentially the situation with Russia. Because when bonds yields go down, and we're down 8 basis points today, that's quite a bit, and normally that would cause a very bullish reaction in the markets, but people flood to bonds and they go buy bonds to drive the yields down, like you're seeing today, when there is fear in the markets or fear around the world. Because what's safer than a US Treasury bond? Nothing. You're not going to get a crypto, a stock, you're not going to get corporate debt, you're not going to get a house. Nothing is safer in the land of investing than the US Treasury bond. So the fact that the bond yields are down today and the markets are down, the Nasdaq down about 1.5%, the Russell 2000 down almost 2%, is kind of concerning nonetheless. And that's a big point of the day. The dollar, last I checked as well, was down. That is also not a good, the dollar down, that is actually a good thing. Sorry, excuse me. The dollar down slightly, good thing as well. So these good indicators that the markets have been following, they're not playing along here today. A reason for that, I will suggest to you guys, besides people just fearful about the whole Russia situation and rushing into bonds, is possibly the Fed Daily sees rates rising at least another percentage point as pausing is off the table, and that was in quotes. A reason why the dollar might be heading down and bond yields heading down as well are investors buying the bonds and selling the dollar because potentially there is fears about a recession. This is also coming off of the earnings that we got from Target, which were not good at all and sent the stock down about 15% here today. Now let's read the key points and then let's dive into some other things that are more specific around AMC. It says the key points: San Francisco Fed President Daly told CNBC that her most recent estimate puts the benchmark overnight lending rate around 5%. She sees a point where the Fed will be able to evaluate the impacts of its hikes before moving higher, but that is not now. Quote, pausing is off the table right now. It's not even part of the discussion, Daly said. And this was not what markets were hoping for. The most optimistic outlook that we had for right now is that we get a 50 basis point rate hike in December and that the Fed pauses. What we're basically expecting from Fed Daly and what she's saying is what the markets are expecting: a 50 basis point rate hike in December, and that would take the federal funds rate up to 4.5%, but that would mean either 2 more 25 basis point rate hikes or 1 more 50 basis point rate hike after that. It's not necessarily what the markets were hoping for, so that is possible, maybe stirring up some fears about a recession, because the pace of rate increases is one thing, but holding rates at 5% for a while, that's another thing. And that in and of itself will cause a recession if you keep rates there for long enough. So that's a little bit of the context of, kind of what is happening here today. On the earnings front, you will have Nvidia here in after hours, and that's pretty much going to be the most important thing, or company, I should say, that will be reporting earnings. We got some guidance cuts from Micron and some CapEx revisions as well. And that is sending that whole sector down here today. But really, Nvidia will be the one to drive this thing home. If Nvidia has bad earnings, well, it could be bad for the markets. That might actually potentially be good for AMC. As you know, a part of this whole short squeeze MOAS situation, event, whatever you want to call it, short squeeze, is the markets kind of heading down, that collateral being squeezed, and shorts at that point being forced to cover because they don't have collateral to remain in their short position. So Nvidia will be important here in after hours, and then you do have Cisco as well, and Bath and Body Works. Those are really the big ones that the markets are going to pay attention to. There's smaller ones, but they're not going to move the markets in the same way as Nvidia and Cisco will. So that is it on the earnings front. Let's talk AMC and let's look at the Stock O tracker data as of right now. And guys, by this Friday, you have currently 45,500 calls that are currently in the money, 189,000 calls that are out of the money. So there is a lot of calls still out of the money. If they do start to go into the money, that will be very, very bullish. And specifically, this Friday has a lot of calls that are just out the money. Like, it's not going to take a big move to get a lot of options to go into the money very, very quickly. And for context here, if we go past $8, that's where things get really juicy with AMC. If you go past $10, you're going to have a lot of options run into the money in a very short amount of time. And that could even push us much higher than that. I'm not going to be the one to sit here and speculate and go all crazy, but if you break past $10, then you're probably going to 15 by the end of the week. That would obviously be a very strong rally. It would be about 100% rally from here. I don't think it is off the table if we can get the right market conditions. And what we're seeing with the Ortex data is we're definitely getting those market conditions that are prime for another rally in a very big way, like 100% in 3 days kind of rally. If you look at the cost to borrow rates, the live cost to borrow rates in which people are actively taking out shares of stock to sell short, you were at a 102.02% cost to borrow rate that someone took out 300,000 shares to short today. Apparently, another 200,000 shares were sold short at about a 78% cost to borrow rate. This is higher than a Beyond Meat's cost to borrow rate, which is about 40%. Short interest, about 40%. If you look at virtually any other highly shorted stock, you're not getting these same cost to borrow rates. And I think relatively speaking here, there is no shares that are able to be lent out as of right now. I don't even know if these numbers are real. Most of these numbers are zeros or in the very low numbers, like right here, 20 shares, 100 shares, 0 twice, 4,000, 2,000, 1,000, 0, 6,000, 10,000, 9,000, 0, and then you get 300,000, you get 200,000. So take this with a huge grain of salt. Keep that in mind. But the cost to borrow rates are reportedly going up from Interactive Brokers. Now, if we take a look at the cost to borrow average numbers that we're getting right now, that sits at about 58.5%. Still very, very high. But like I said, guys, I'll stress it once, I'll stress it again, I'll stress it 3 times if I need to. Take these numbers with a grain of salt. Cost to borrow max sitting at 153.22% and cost to borrow minimum sitting at 6.56%. There's obviously a lot of activity around AMC stock, and there's a lot of people that want to get their hands on shares of AMC. Now, if we look at the positive order value with the option activity here today, you're sitting at 4% positive order value, 12 orders totaling $359,000. So not a very positive day as far as the options are concerned, but really in the grand scope of things, you've only had a little bit over $250,000 that has went into AMC options. So it's just not a huge option day in general across the broad markets. There's not a lot of movement in the options market. Now, what I will say about AMC so far, we're not quite to the end of trading here today. Obviously, this video is going to come out at about 2 12:30-ish, give or take. We'll see exactly what time it does come out. But AMC was actually rallying in the pre-market when these retail sales numbers did come out, and that's something I should call out as well. The estimate for retail sales month over month was a 1% gain. It came out at 1.3%, so that was stronger than expected, also going against what kind of the Fed wants to see, right? The Fed wants to see weak retail sales, and potentially that's another reason why the markets are selling off. Not as big of a reason I expect from here. That's not going to be the reason the Fed decides to slow down or give us a smaller rate hike. It's not going to be the retail sales. It's obviously the CPI data, in which that already came out as good. But AMC did react very favorably once this did come out, and just continued to slip all the way into the open today, the cash open, and then we kind of have been playing along with the markets ever since, besides these periods of sustained momentum to the upside. And I think if today wasn't such a red day in the markets, that AMC would actually be up 10 to 15%. If we were just a neutral day overall, I think AMC's momentum from pre-market would have carried over throughout the rest of the day. Now, as far as this indicator that I was pointing out, guys, this double bottom, you can see these, essentially the shade of green. I'm not sure how good you guys can actually see it, but in the top end range from about $9.15 to $10 per share, it's a little bit darker green, and that is where this indicator is predicting that AMC stock will go as of right now. As of we got this double bottom, and this actually happened about 2 trading days ago. And what happened ever since then is we gapped up above the 50-day moving average. We held that level, and we have actually touched it twice since then. Today is no exception, and you literally bounced right off of that level at $7.17 per share. And let's go ahead and take a look at the live trading, and you actually went 1 penny under that at $7.16 per share, give or take. 1 penny doesn't matter. You found support at the 50-day moving average, thus again confirming this double bottom pattern that we are seeing. And even though the markets are super fearful, we're still holding support at that 50-day moving average. And this dark green level is right under the start of it, is right under the 200-day moving average at $9.29 per share. So if you can get up to that 200-day moving average, it's likely that you can break out above that, but there is a chance you do find some resistance at that level. And why I think it's going to be the end of this week that we actually get to that $10 level, hopefully, right, is what the technical indicator is telling us, is because the option activity, and we're seeing some very strong option activity, not only in the open interest, but in the volume as well. So at the $8 strike, you have seen 15,000 for volume, $8.50, 6,000, $9 strike, about 4,500, $9.50, about 2,600, and the $10 strike, about 6,000 for volume on the day. For open interest, you're looking at 28,000 at the $8 strike, 17,000 at the $8.50, 15,000 at the 9, 5,000 at the 9.50, and at the $10 strike, you're looking at 21,500 for open interest. And the cost for these options is very cheap, so the break even is also very low, meaning when you break out above those strikes, if you can hold that level and continue to go even a little bit higher, you're talking 10, 15, 20 cents above, call it $8, that's where you're going to see a lot of hedging start to take place, and that could push us up to the next strike and the next strike and the next strike. And I don't think it's any coincidence that we're getting this double bottom pattern that is actually forming and literally predicting to us a range in between the low end 50-day moving average, in which we touched earlier today, and the high end range of about $10 per share. This is no coincidence that you are literally following this double bottom pattern to a chart and the 50-day moving average, guys. And like I said, volume is super low here on the day in the broad markets, only at about 22.5 million for volume. So imagine if you do get AMC breaking out above, call it $8 and these key strikes, that's 2.85 million shares at the $8 strike that would have to be hedged for, 1.7 million at the $8.50, 1.5 million at the 9, 500,000 at the 950, and 2.15 million shares at the $10 strike. That would be roughly half of today's volume that could come in at any time as straight buys from the market maker by the end of this week. That would be monumental, and really, $15 might be calling it lightly if that were to happen, guys. So that is going to be all for this video. Let me know your comments, questions, or concerns down below in the comment section. Nonetheless, if you guys want to come trade with me live in real time as well, link down below in the description of this video. Until the next video, you guys take care.